What's going on, everyone? It's your boy Momo Trades. If you guys are looking for a price action tutorial, look no further. Let's get right into the video. So the first thing that we want to do before the market opens is simply draw our trend channels to show us what exactly is going on in the market. And it's pretty obvious that we're in an uptrend, so we want to look for any two-legged pullback at the EMA with a nice bullish signal bar. And what do we have? We have one right here. It is 40 minutes before market open, but I'm going to mark that trade as a nice setup. We have a new high here. We went down, one leg down, first attempt to go long, second attempt to go long at the EMA. No reason to think we should go short at any moment, and we actually didn't get a trigger, but it's just something to keep in mind that we are looking for those setups. If we had triggered above that signal bar, we would have wanted to take a long. So now we're working below the EMA, and we actually have something that is really a form of a trap trade or a failed second entry long. So we have a new high, we had one leg down, first entry long, we went down again. Here's the second entry long, but compared to the first trade that we marked, this is below the EMA. It is a bullish signal bar, but if the next bar finishes bearish, which we have right here, and we continue to work lower, then it's going to act as a form of a trap for all of those buyers who bought too low in the move below the EMA. They're going to get trapped. So I would recommend selling at this point. Once again, we draw our short-term trends. We're still expecting at least a new low of this short-term trend before the uptrend is going to continue, if it does continue. So this is a nice failed second entry long trap trade. A few minutes before market open, it did stall on us a bit, but eventually all the smart traders continued to sell, and we ended up working lower. So now that we worked very, very far down, considering what looked like a great uptrend, we have to kind of reassess and see what is going on, and we might honestly want to fit another wider term downtrend because it's starting to look like a spike in a channel. So we had a spike down, and we're working in this concise channel. So once again, we're going to look for a two-legged pullback if we can get one, and this time we're going to look to start selling because we've been playing off this EMA many times, so we want to just get in on that price action. So we have a new low here. We had one leg up, first entry short, another leg up, second entry short. The signal bar isn't the greatest, but if this was a little more bearish, I would recommend taking that. We didn't end up getting a trigger anyway, but we do work lower after this bearish bar. So this is another trade that we want to take a look at right here. So this is another form of a trap trade, and even though it's not technically a second entry long, because here's our first leg, here's our second leg, and in reality we really have a third leg up. But you can look at it as third legs, or how I like to interpret this is that, okay, we have a new low here, we went up, we have a first entry short, second entry short, as we already discussed. So when the next bar triggers below this one, that creates the second entry short. We're still below the EMA, we're still expecting to continue working lower, but we end up working higher, and that created a failed second entry short. So previously, in the first trade we looked at, that was a failed second entry long because we had one leg down, second leg down. Here we have one leg up, second leg up, and then that failed. But in this case, it's a little bit different because it actually is giving us an opportunity to get in on a double trap, because all the sellers were going to be trapped when we worked higher, and then now all the buyers are going to be trapped again because we're still working below the EMA. We're still expecting to continue working lower, potentially even down to the lows of the day. And this is a nice trade in my opinion because it's a double trap, as we stated. It's a failed second entry short, and then that failed second entry short ended up failing as well. So I know it's a bit confusing, but it's basically a trap of the failed second entry short. and that nice bear signal bar just gives us even more reason to go short. So we do bounce at this bottom side of the trend channel, just showing us that it is valid. And let's see if we can get another second entry short. We do not get one yet until we have this doji bar, but we're above the EMA, so we don't want to just pull the trigger on any second entry short. And now it's time to sort of reassess because it's starting to look a little sideways. There's no clear direction, and we're getting a lot of support at this level. So what I like to do is just draw a support level and draw another little resistance level, because it looks like we might just start ranging, because it is very common after a significant move down where we just have some sideways movement. So here we do get another bearish bar at this level. You could argue for this trade, it is a triple test, so I will mark it. It is a little bit more aggressive trade because nothing is too proven yet, but the fact that we have a triple test, we had this leg working up, we had a break, new high, I would argue for this trade, and look what happened. We rocketed down. Once again, it's just price action. You got to interpret it like it's a language. So we had 1, 2, 3 touches, nice bearish bar, no reason to really go long. Even though it's hard to really tell exactly the direction of the market, it just means we are basically in a range. So if we are at the top of the range, we want to look to sell, and that's why we ended up working lower. So here we have another similar situation. We have a leg down, break, new low, and now we have a bullish signal bar. So it's really a quadruple test. So we had 1 touch here, 2 touches here, 3 touches, 4 touches. But in this case, I would not recommend going long, simply because we still have room to the lows of the day. In this case, it was all right to take this short because we've been working lower. Here it is a lot more aggressive because you would basically be picking a bottom, and it ended up, let's see how much it would have worked out. So yeah, you would have got trapped if you took this long. So that's why the overall context is very important. Just if you're gonna take a sort of riskier trade at the edge of a range, you want to take it in the direction of the previous move. So we were clearly previously working down. It's okay to go short. It's not really okay to go long, because in the long run, those are not very high probability trades. And as we were saying, we are expecting to potentially make a new low of the day. So we didn't quite reach it, but we essentially reached that support level. So now it's time to reassess and potentially look for a reversal if we start working above the EMA and prices head higher. But until we get that, there's no real reason to take a long. We might even want to widen this downtrend. Let's see if it looks valid. It doesn't look too valid to me, because if you analyze this sort of downtrend, it really doesn't scream that it's something very concise, because there's all of this space at the bottom of it. So in my eyes, I really would just interpret it as we had this spike down, we had a channel, we had a break, new low, and it might be time to start looking to reverse the market, as we were stating. So here we do have another trap trade. We have new low here, first entry short, second entry short that failed, and then we have a double trap. But in this case, we're very close to the lows of the day, so I would stay away from that trade. And would it have worked out? It would have barely worked out for 1 point scalp, but for the reasons I stated, I would stay away from this short right here. And let's see what happens. So we do eventually start working higher, and even we see that we have a new low, first entry short, second entry short, failure. That honestly looks like the trade to take, because we're clearly having some buying at these levels. We're working above the EMA. It's another higher low. That looks like a nice trade. So we do start working higher before just getting rejected. And it's really a no trade zone at this point. We're just sideways, 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 so you do not want to get trapped in all of this. We might as well just draw another level of resistance, because now at this point we might just work back to the lows of the day, but really there's no clear direction, and now we do finally get to the low of the day. So let's see if we have any opportunity to actually buy if we work above the EMA, because it might be time to reverse, but instead we just creep lower, creep lower, creep lower. So now at this point, let's reassess, zoom back out. This is exactly what I would do in real time. So we're definitely just working lower. There might even be a wider downtrend at this point. So now the fact that we clearly significantly worked below the lows of the day, I'm only looking to go short. So if we get a two-legged pullback at the EMA, I'll look to go short, but instead we start working higher again. So now there's a lot of conflicting patterns, but we really just want to not force any trades, and let's see if we start working lower again. So here we do get a lower high. So this is a form of a larger two-legged pullback. We have one leg up here, two legs up here. It's a second entry short. So some aggressive traders might honestly argue for this short here, but the higher probability trade is this lower high, because we have two clear legs up, momentum below the EMA, nice lower high. It is a little bit away from the EMA, but I would argue for this trade simply because if you were trading in real time, you could kind of tell that the sellers were coming to play, and that's why we ended up working lower. So let's see what happens now. So now we are getting to the afternoon session. There's not too much volatility right this second. It is a bit sideways. Let's draw another short-term trend. We have this short-term trend here, break, new low, no trade zone, no clear direction, and we just end up going sideways, sideways, sideways. No real reason to take any trades here, but that's just what price action is, guys. You don't want to force any trades. When the trades do present themselves and are very clear, you want to take those high probability trades. Otherwise, you got to just wait and sit on your hands for a nice lower high failed second entry long like we have right here. So now we're really just playing these range rules. So we have clear range, we have a breakout of the range, we have a failed breakout, so we have a lower high here. If we get another lower high below the EMA, this now creates a failed second entry long. So we have a new high, went down, first entry long, second entry long, failure. I'm going to take this trade all day, and we did end up getting trapped. But honestly, I would argue for this trade 9 times out of 10. It didn't work out, but no trading technique is going to be 100%. I would definitely say this trade is all right to take, but at this point it is just a little bit risky because we're getting close to the end of the day. So I don't see anything too enticing besides potentially this lower high right here. But at this point it is, like I said, getting close to the market close, and that's just how we ended the day. So sometimes it's better just to not even take these trades after such sideways movement. But at the end of the day, we got a few solid trades. Hope you guys enjoyed the video. Let me know in the comments what you like to see more of. If you have any questions, comments, let me know. Have a good one.